Hi, everyone. It is Phil Bailey, and this is the London, Ontario Real Estate Podcast. We're back for episode 7. And I've been hearing a lot of questions from clients and people in London looking to buy a home this year or considering buying a home this year. And one of the things that always comes up, and it's certainly something that I relay to the experts, is around how do you get a mortgage? How do you go through a pre-approval? What are some of the things to watch out for? So I've actually brought on to the show. It's our first guest. We're pretty excited here, and we brought on Eddie Barahona Mortgages, who's a local London mortgage broker in town. His past is in accounting, which I love because he actually really understands the numbers behind what goes into a mortgage and getting a pre-approval. So welcome to the London, Ontario Real Estate Podcast, Eddie.
Thanks, Phil. I really appreciate you having me on the show.
Awesome. So I guess the first question I'm always getting from my clients is, what do they need what do you need from them when they're getting a mortgage pre-approval? So if someone comes to you and says, hey, I'm looking to buy a home, what are the things and what are the questions that you're asking that person when they contact you?
That's a great question. I think becoming a homeowner is a lifelong dream for many Canadians, right? And in order for me to do my job properly, I ask them two things. First one is, what level of, expertise or knowledge do you understand mortgages? So I ask them, what do you know so far about the process? Because then that helps me educate the client, because a part of my responsibility and my role is to ensure that the homeowner becomes educated so that they can enter the market comfortably and knowledgeable even after they leave me, because that's my job and responsibility. And then the second one I ask is, what are your goals and what do you want to accomplish over the next 5 years, so I can really gauge and assess what product fits them.
I love it. Yeah, that is something that I definitely use in my real estate business as well, is that I give people the information, and then I let them make those adult decisions that I know that they can make, but I want to guide them through that process as much as possible. Okay, so someone comes to you, you ask them kind of the initial questions. What type of documents would you be looking for, and what do they need to have ready to go in advance of even going to look for homes?
I think the biggest thing people have to look at when they're coming to any mortgage broker is getting your letter of employment, because depending on your employment and how it's stated by your HR department, it could take them a couple days to hand that letter. So if you're going into the weekend saying, I'm going to be able to throw an offer out there, but you don't have a letter of employment, that's all dependent on your HR. Everything else is fairly, accessible. When it's your bank statements, it's something you can print off using your online banking. And then showing your down payment, right? So when it comes to the documentation process, I like to, as a core principle that I have in my business model, is making sure that I have all documentation up front. So it would be that letter of employment, because I need to see what exactly stipulates your guaranteed hours, because then I can associate and attribute that amount to how much you can get funded for. Because all in the wording, it's very important for any mortgage broker to dissect that. So when it goes to the lender can easily interpret it.
Yeah, that makes a lot of sense, and that's something I think that it's really important that someone looking to buy a home does this well in advance of even starting the process. So I do have some people contact me, and they think they're approved for a certain range, and I always just make sure that they're talking to someone like yourself to make sure that they have all those ducks in a row prior to going out to look for homes, because I really don't want them to be disappointed and spinning their wheels on a home that doesn't really make sense for them. So I guess right now, one of the things that we've been talking a lot about on the podcast, and I've been hearing about from clients, is just how crazy this market has been in London. There's been multiple offers on almost every single house that I think that I've been a part on the listing and the buying side this year. What are the things that people need to be watching out for in the current market to make sure that they can feel comfortable going ahead and buying a home? Are there some pitfalls and things that they should be looking out for that you've come across?
Absolutely. I think that there's a lot of risks associated into, I guess, any transaction that you go in, but it's minimizing those risks. And that comes from my accounting background, where how do you reduce somebody's exposure to risk? And that's by having that conversation about how much down payment you have, right? Because I want to take a look at, if you are going in firm, do you have the resources available to you? So I think the two big topics right now that I'd say would be pitfalls, but also to kind of be wary for any first-time home buyer, is going in firm, and also appraisals that might be triggered by the lender. And that's due to the volatility in the market when you're noticing these benchmark price ranges that are occurring, right? When you see the listing price goes up and then the purchase price is significantly higher. So when you're getting such a difference in listing price to purchase price, the lender really wants to see, are there comparables in the area that can justify that? And if there aren't, will you have enough cash to pay the, I guess, the difference between that? So taking very basic rudimentary numbers, property sells for $500,000, but comparables are only $400,000. If the lender asks for an appraisal, and then it comes back that the comparables are matching to $400,000, you have to come up with that $100,000 out of pocket, right? So it's something, if you do waive your financing conditions and you're going in firm, that you have to be very comfortable and have access to cash in the event that the lender comes back and triggers this appraisal.
No, that's great. I think that's something that I've definitely been talking to clients a lot about, or making sure that their mortgage broker has explained that to them. I'm definitely not the financing expert on the team. I consider myself somewhat of the generalist around real estate, and then I bring in experts like yourself, or obviously a lawyer is needed in the process, maybe a home inspector. So I think it's really important that you're covering off those questions early on in the process, and that you're not surprised by them later on, after maybe you've made an offer on a property, or you've already purchased something in writing. So given the fact that the market has been going up at such an alarming rate, I think for a lot of us, one of the things that I've been asked about is, what do you actually need in terms of a down payment when you're purchasing a property? Could you just maybe walk us through what funds you should have available in terms of your down payment? And just give maybe listeners an idea of maybe some of the resources they should have on hand.
Absolutely. And I think closing costs is one of those topics that we'd like to discuss earlier on, because in addition to your down payment, so you can enter the market with 5% up to 20% if you're looking at a high ratio mortgage. Anything over 20% would be considered a conventional mortgage. And what I look at is, when you have, regardless of 5% or 20% down, you have to factor in closing costs. And the closing costs are going to be your legal fees, which range from up to $1,500 plus disbursements, depending on the lawyer. There's also going to be land transfer tax. So as a first-time home buyer, there are rebates that you're eligible for, which is up to $4,000 that you're going to be able to save on that. But then property taxes in arrears. So if property taxes have been prepaid for the year, then you have to pay that money back to, I guess, the seller, right? So these are some of the costs that are associated to the property itself that you really only see when you get to the closing stages. So we like to factor in closing costs to be 2% of the cost of the home. And that's fairly accurate, depending on if you qualify for the land transfer tax, or if you don't qualify for it, then you're going to be susceptible to that if you're not a first-time home buyer.
Great. No, that's very helpful. I think those are the things that we're trying to avoid, is those surprises on a closing day or a few days before closing day. I know it's something that I want clients to be able to avoid that stress, if at all possible. I guess one of my final questions I've had, and it's something that I always get questions about, and of course I lead them to a mortgage broker like yourself to answer the questions, and that's around rates. What are you seeing in terms of mortgage rates? Obviously, we're seeing some historical lows, but I'm curious in terms of what you're seeing currently, and if your down payment also plays a factor in what rate you would likely be getting.
Yeah, I think that's a phenomenal question to kind of sum things up here. I think that as just regular consumers, behavior has been designed to look at rate shopping. So trying to find the lowest rate, I look at, does the rate reflect the flexibility in the product? And that all goes back to assessing your goals. But right now, we have seen some historical lows since prior to '08 due to the financial collapse. But recently, this was as of last week, without going too deep into the weeds with it, Bank of Canada Chief Tiff Macklem was out speaking about the economy and how it's rebounding. So it's actually caused a slight increase into the interest rates. And we're noticing that by different activities, and lenders are increasing their rates again. It's not this substantial increase that people were worried about, but as we start seeing the economy rebound and starts to boom post-COVID, you will start seeing those interest rates start climbing again slowly and gradually. If we recall, last year around January, rates were about 2.89. Right. So right now we're sitting in the low twos. And I guess to answer the second part of your question is, does it differ between having 5% down versus 20% on interest rate? It does, because when you're paying 5% down, you will have a lower interest rate, but you're paying CMHC or mortgage default insurance. So you have to factor that into the overall cost of the mortgage. Whereas when you're paying 20% down or less or greater than 20% down, you will have a slightly higher interest rate, but you're not going to be having the mortgage premiums associated to that mortgage as well.
Great. No, that makes a lot of sense. It's something that I'm always telling clients to talk to their mortgage broker about, because again, sometimes rate shopping can be a very good thing, obviously, for clients to do. I want to make sure that they're getting the lowest rate. But one of the other things I'm seeing, and maybe you can just touch on this briefly, is what the actual mortgage product is in its totality, meaning that it's not just a rate, but what if you need to switch, or you need to make a move, or you got moved for your job and you're moving to Vancouver tomorrow. Those kinds of things are happening all the time. So what are your thoughts on that?
So the best way to explain is why I always start off every conversation with prospective clients is, what are your goals? Because in understanding where your goals are, you can find a mortgage product that meets your current flexibility and needs, or your future flexibility and needs. And that's related to how portable the mortgage is. So rate is one component of it, but the flexibility, how portable it is, your prepayment penalty associated to that mortgage is all going to be reflected in the interest rate, right? So when you're getting these no-frill products that have bare bone flexibility, you're going to see those lower interest rates. But as you start seeing that couple differences in interest rate, you will notice you're going to get more flexibility. You are going to have a better product that suits your needs. And then something that's not going to surprise you a year or 2 years down the road. And biggest one that I have, I guess, for anybody that's listening is, make sure you're very, aware of the term a bona fide sales clause. Because if a lender stipulates a bona fide sales clause, you cannot switch to a lower interest rate or go to a different lender unless you sell that property. And that's one thing that we've noticed with a lot of credit unions who do offer competitive rates, that will lock a client in, and then they cannot switch to a different lender for lower interest rate unless they sell that property.
Wow, yeah, that makes sense, and I've definitely seen some clients in that position where they weren't aware of the terms of their mortgage, and then they're paying tens of thousands of dollars to make a switch, or because they have to make a move, and maybe they can't buy a house right away, or there's not the portability in the mortgage that they thought about. So this has been exceptionally helpful. I know listeners ask me a lot about financing questions, and it's something that I always say I am not the expert on, but I would like to bring in a mortgage broker like yourself into the process to make sure that these questions can get answered as quickly and as thoroughly as possible. So I'd love to have you back on the podcast in the future, Eddie. One question I do have for you is, how can people get a hold of you? What's the best way to contact you if they do have a mortgage question that stems from the podcast today?
So there's multiple ways you can get a hold of me. Through my website, it's www.eddiebara.com. There is a way to book an appointment. You can schedule either a virtual Zoom call, or you can schedule a phone call with me, or you can text me or call me at 519-852-8207. My phone's available. I'd love to entertain clients or any questions that you may have. Or you can reach me on my email at mortgages@eddiebara.com, which is EDDIEBARA.com.
Fantastic. Thanks so much for joining the show today, Eddie. I will put some contact information in the show notes for today. And I just want to thank all the listeners for listening to the London, Ontario Real Estate Podcast. I am Phil Bailey from Royal LePage Triland in London, joined by Eddie Barahona today on the show. Looking forward to the next episode, and thanks so much for listening.